Australians should be doing much more shopping around when it comes to home loans, according to comparison experts InfoChoice.
They estimate we're costing ourselves $2.7 billion in excess mortgage payments, mainly because we stick with the big banks and don't seek out alternative players. Joining us now is InfoChoice's CEO, Shaun Cornelius. Shaun, thanks very much for coming in.
Pleasure.
Why our reluctance to go elsewhere other than the big banks?
Well, we're perplexed. What we're seeing today is the big banks are increasing their interest rates and also picking up market share. So we believe now's the time for everyday Australians to look around for better options. We believe effectively consumers are being charged a premium for banking with the major banks, and there's potential savings of up to $2.7 billion in interest for home loans being banked with the big four. People could save that money if they moved outside of the major banks and found a better deal.
But there are no guarantees, are there, that credit unions will remain cheaper than the big banks as far as interest rates go?
There are no guarantees, but what we do know is generally across the board you can save about 0.5% on a home loan if you look outside of the major banks. So they're credit unions, they're non-bank lenders, they have competitive products. If you're not getting the best deal, you should look around and continue to shop around and make sure your money works hard for you.
As secure as the products that are offered by the big banks are, and with the same kind of conditions, or do they vary?
Well, one thing to be clear on is the lender effectively bears the risk with the home loan, so that's important. And then the other important thing is Australia does have a good regulatory framework, and credit unions are subject to the same framework that the banks are. So that's good. And the other point is that credit unions are a member-based entity and really do look after their clients. In fact, the customer satisfaction research we see shows that often and generally credit unions have higher customer satisfaction than a lot of the major banks.
Okay, so what percentage of people are actually with the big banks by comparison?
Well, a growing number of people are moving to the major banks. In fact, the recent numbers show that over 90% of new home loans are being taken out with the major banks. So we've got this interesting situation where more and more people are banking with the major banks, and the major banks are increasing their interest rates, as we saw Commonwealth Bank announce an increase in their variable rate last Friday. We've been seeing over the last 2 months several increases in fixed rates from a lot of the players. In fact, some of the fixed rates, particularly 3-year fixed rates, have increased by over 1% since April, when the RBA last made a change.
In these very troubled times that we've been living in over the last year or so, there's certainly a perception out there, at least, that, well, you go with the big banks and you're safer and more secure. Is that a mistaken or misplaced perception?
Well, we believe that's largely an irrational perception, particularly when you're borrowing money from a lender. As we said, lender effectively bears the risk. We've got a great regulatory framework. There are a lot of other institutions that have been around quite some time. They are significant in size. People need to shop around. It's quite easy to compare interest rates, particularly on the internet. A site like InfoChoice compares interest rates in the market. So I think what we're seeing is largely an irrational move, this supposed flight to quality. We think there's not actually a rational reason for it right now, and there's a good reason to look elsewhere.
Are you talking about switching as well? Because there's a great deal of hassle and some cost involved in that, yes. Yeah.
Well, we've got to look at the difference between fixed and variable rates. Fixed rates do bear significant penalties if you're terminating a fixed rate loan early, and often it may not be worth your while doing so. Whereas variable rates, each product has its own exit fee. It's definitely one to look at. What's your current exit fee, and the new home loan, what that will be. But often, when you bear all those in mind, net, you will gain by finding a better product in the market.
Okay.
Shaun, thanks so much. Great to see you.
Thanks, Shaun.
Thank you.